Welcome back. It's time for our weekly market update with Catherine Murray, host of The Buck Stops Here. All yours, Catherine.
Thanks, Seema. Hello, everyone, and welcome to your weekly market recap. I am Catherine Murray. Well, we have seen quite a bit of volatility in the markets this week. We started off with a major slide on Monday as investors are nervous and concerned about what we will hear from Fed Chair Jerome Powell on Friday morning at the Jackson Hole meeting. There is the view that he might be hawkish, again, trying to combat inflation. And the market really sold off on the back of that news to such a degree that we've actually now found some stabilization as investors believe that the risk of a hawkish stance from Fed Chair Jerome Powell is priced into the market. Now, just to step back, if he is in fact, though, a little bit more hawkish than the market is currently anticipating, you will likely see the market sell off and you will also see that US dollar continue to show some strength. If in fact he's a little bit more dovish, we'll probably see another rally in the equity markets, and you'll probably also see the deep cyclicals and industrials and precious metals also have a nice rally. Of course, the focus is very much inflation, but in many ways, what can he really say or do? Because keep in mind that one of the key reasons we're seeing inflation is because the lack of supply in the energy industries across the world. That's really a structural issue. You can't just change that overnight. Also, of course, wages are increasing and have been increasing, and you've got labor shortages driving that. And then, of course, we have the war. So difficult to combat inflation. Having said that, they are, in fact, doing somewhat of a job because you are seeing a slowdown in some of the economic data. Now, in terms of the markets moving higher yesterday and today, the key reason for today is big news overnight out of China, where we did get some stimulus out of China to try to boost their economic growth. Interestingly, we are seeing the lowest recorded growth in China over the past 30 years. All eyes will actually be on what we will hear from the Chinese Communist Party upcoming Congress and what they might be thinking about doing or put in place to do to increase their economic growth. The other key factor that investors are watching is the price of oil, or WTI, up by about 1.2% yesterday, on pace for 5% gains this week. That is after OPEC Plus suggested that the group might actually cut production, particularly if Iran's oil comes on the global market. Interestingly, as well, in terms of what countries in Europe are facing with the oil and supply constraint, the German government is worried about the problem with coal supply for the fall and also, of course, the winter power supply. You're also hearing that out of the UK, where the ministries there are warning the cost crisis that companies might face with their energy bill increasing fourfold. So energy is still very much in focus, and the price of WTI, as I mentioned, up by about 5% this week. In terms of earnings, we're still getting a lot of tech earnings out of the States. On the positive side, Snowflake, that stock was up 18%. NVIDIA and the chip sector was down by 4.5%. They did have a slight earnings beat, but guidance was below consensus. Nordstrom, that stock was down by about 20%. They're noting a slowdown in the rack and the lower end consumer. Housing, Toll Brothers had a much greater than expected order decline, but nonetheless, you actually saw the housing stocks yesterday, cruise lines and airlines, and also Chinese tech move higher. So again, a little bit of a risk on mode helped those areas of the market. Also, one other stock to watch that people are going to be talking about is Peloton. They did announce earlier in the week that they've reached a deal with Amazon to sell their equipment on Amazon, but they did actually just come out with their earnings, and a big disappointment there. Stock looks to be down maybe 18 to 20%. Away from that, as we look at the Canadian markets, we are pointing to a higher session today, following a higher session yesterday, but marginally so. We're not seeing big moves here in the Canadian market. So somewhat range bound, I would call it. The big news here in Canada is really what we're seeing out of the Canadian banks. And the main theme or takeaway to be aware of is the cautious tone coming out of the Canadian banks. They are increasing their loan loss provisions, in other words, really preparing perhaps for a recession, of course, or are we already in a recession? But nonetheless, the point is that they are preparing for perhaps more difficult times to come. In terms of the earnings specific stories, CIBC and TD beat on their third quarter results, but profit was down. And again, continuing the trend of a little bit more of a cautious outlook. We also saw RBC and Scotia report their numbers earlier this week, and the stocks actually traded lower, so somewhat underwhelming to the broader investors out there. But again, a lot going on in the markets, a little bit of a quiet this time from a headline perspective in terms of moving the stocks. All eyes on the U.S. Federal Reserve tomorrow at Jackson Hole. Nima, I'll leave it there. Back to you.
All right, thanks for that, Catherine. For more on the markets, be sure to tune in to the Buck Stops here.